Top three things in my notebook this morning. A lot of things we've been talking about. Number one, the VIX. Number two, the Russell 2000. And number three, all of Europe. So number one on the VIX, you can kind of call it 1, 2, and 3. Points 1, 2, and 3 would be that the VIX, once again, has not held below 10. So we've seen a crash to the upside in volatility, of course, this week. Volatility up 24% in a straight line. The Russell went down 4% in conjunction with that, and it probably felt a lot more than a little bit of a slap out there if you're long that long beta Mobro momentum. But at the end of the day, we don't have you along that, so you're probably pretty happy about this week. VIX is now immediate term trade overbought, or at least it was on the front month yesterday. So again, this is not the spot where you want to be completely aggressive on the short side, particularly going into the weekend and coming out of next week's earnings start to the season. So point number two is the Russell 2000, which I already hit on. The trend line is now broken. So again, the Russell 2000, 2 points to be made there. The trend line is 1173. That's now bearish, as it has been many times throughout the year. That's point number one. And point number two is that the Russell 2000 is down year to date. The great bull market of 2014, we're in the middle of July almost, and the Russell 2000, which is a broad measure of U.S. domestic consumption growth and stocks, is down year to date. So again, try to reconcile the storytelling from that perspective. If in fact you're a growth bull, we are not. So again, don't buy the Russell 2000, buy slow growth yield chasing. You can either buy that via bonds or anything that looks like a bond, including utilities and REITs. Now the final point, which is of course Europe. Again, Europe, I don't think anything that happened from a U.S. volatility perspective, Russell 2000 or bond yields had everything to do with Portugal. Just newsflash, Monday and Tuesday, Portugal wasn't in the news, and all the momentum stocks in the U.S. got hammered. But Europe is important to watch. Obviously, Portugal, what we learn here today, or what I learn on any decline, is much more from the bounce than I do the breakdown. So again, you learn a lot about the bounce. And just newsflash, there's no bounce. So if you look at the FTSE, the DAX, the bounce is like 0.2 to 0.3%. But more importantly, it's not back above the trend lines, which is the most important point. You'd have to be 1,000 points above where we are on the PSI 20, which is Portugal's stock market, to get back above its trend line. So a lot of markets in Europe have gone from bullish trend to bearish trend. Whether or not they stay there, I'm not going to call God and ask him for the answer. The market's going to tell me. So those are your top three things.